The financial repair charges 30,000, that should be deducted. Investment consider 500 into 100. By followed 50,000, 8% is 4,000 rupees. Expected profit 4,67,000 in 12.5%. 12.5 works out 58,375. What is capital employed? Total asset minus total liability. It may be book value or balance sheet, half of the current year profit. That is the profit for the year. Hello, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today, in this session, I am going to hand Corporate Accounting, third semester, Unit 3, Session 3 of BCom in favor of Valuation of Intangible Asset. In that value of intangible asset, today, in this session, I am going to discuss Valuation of Goodwill. When the balance sheet is in the last session, I already discussed about the two problems. Two more problems I'm going to solve about the valuation of goodwill. We'll move on to problem now. Valuation goodwill when balance sheet is given. Goodwill is called super profit into number of time. What is super profit? Actual profit minus expected profit. This is called normal rate of return, NRR. It is called normal rate of return or expected profit. So you have to calculate actual profit, you have to calculate expected profit, super profit will come. How many times? They may say 3s or 5s multiplied by 3 or 5. From the following balance sheet Alpha Limited, 31st March 2021, compute the goodwill on the basis of super profit, assuming 3s purchase means 3 times. Building, stationery, asset value is given. These are all called book values. These are all called book liabilities. Liabilities are creditor, only creditor is given. Here profit and loss account of the last year, current year, this is preference share and equity share. The following information is furnished to you. Building is what is called market value. Profit for the last 3 years have shown an increase of 30,000 annually. Every year, the profit goes on increasing. So, you see that today's profit is 1,70,000, deduct 30, 1,40,000, deduct 30, 1,10,000. In the financial repair charges 30,000, that should be deducted. Investment consider 500 into 100. 5 followed 50,000, 8% is 4,000 rupees. Normal rate of return 12.5, tax 40%. While calculating the average capital employed, the preference share capital should be deducted. And while computing the actual profit, the preference dividend 10% should be deducted after making provision for taxation. We'll move on. Book value of Alpha Limited statement showing competition valuation of goodwill. Goodwill is equal to super profit into 3. Super profit is equal to actual profit minus expected profit. Profit of the current year, 1,70,000. It has been reduced 30,000, 1,40,000, 1,10,000. Add the figure. 7 plus 4, 11 plus 12. This is 4,20,000. Add the repair charges which is not deducted, capitalized. Deduct 30,000, 3,90,000. Average profit 3,90,000 divided by 3 is 1,30,000. Income from investment is non-business income. Deduct 4,000. It is 1,26,000. 40% of that work out 50,400. Balance is 75,600. Preference dividend 10% on preference share capital. What's your preference share capital? See that 50,000 is there. What's the percentage? 10%. This is 5,000. Actual profit becomes 70,600. Then come back here. So average profit you are calculating. Now you have to calculate capital employed and normal rate of return. So 12.5% is the return we are expecting. Market value of the asset. Building 3 lakh, revalued. Machinery 2 lakh, stock 40,000, debt are 60,000, cash at bank 20,000. As per the balance sheet, becomes 6,20,000. Deduct credit are 20,000. Deduct preference share capital 50,000. Then 70,000 gone means it is 5,50,000. Less half in the balance sheet is given. You have to do half of the current year profit minus half of the current year profit. 1,66,000 divided by 2 become 83,000. It become 4,67,000 is the capital employed. Expected profit 4,67,000 in 12.5%. 12.5 it works out 58,375. Super profit is equal to actual profit minus normal rate of return. What's your actual profit? 70,600. Normal rate of return is 58,375. How much excess is there? 12,225, which is considered as super profit. Goodwill, how many times they ask? 3 times. 12,225 into 3, it becomes 36,675. This is the value of the goodwill. Hope you understand. We move on to the next problem. Following is the balance sheet of our limited for the year ending 31st March. So they have given the balance sheet and they have given the liabilities also. The liabilities are debenture and creditor, total asset. First, we have to calculate capital employed. What is capital employed? Total asset minus total liability. It may be book value or balance mean half of the current year profit. That is the profit for the year. And here, capital employed is 10%. First, calculate total asset minus total is capital employed minus half of the current year profit. Deduct the normal rate of return. There is average capital employed. So, normal rate of return. The profit of the current year is 80,000. 80,000 minus the super profit into number of times. That's all. Calculation of average capital employed. Particulars rupees. This is capital employed. Book value or market value. Come back here. Any change you have to look after. Building is revalued 1,50,000. $1,50,000. Then machinery valued 30,000. Machinery 30,000. Debtors 40,000. Then stock 40,000. Then cash add the figure 3,20,000 minus total liabilities debenture 70,000 creditors 30,000. It becomes 1 lakh, 2,20,000. Capital employed there is no preference share capital minus half of current year profit $80,000 into 1 by 2, 40,000. This is your average capital employed. Average capital employed. Now, normal rate of return. What's the percentage? 10%. 1,80,000 into 10 by 100, 18,000. This is normal rate of return. Average capital employed is 1,80,000. 10% means 18,000. So super profit, average profit minus normal rate of return. What's your average profit given? 80,000. Normal rate of return 18,000. It is 62,000. Goodwill. Goodwill 2 years purchase. Goodwill 62,000 into 2. 1,24,000 is the value of the goodwill. 1,24,000 is the value of goodwill. So, normal rate of return, average capital employed is 1,80,000 means 18,000. Super profit, average profit minus normal rate of return, 80,000 means 62,000. How many times? 2 times. 62,000 is 1,24,000 is the value of the goodwill. First, you have to calculate average capital employed, total capital, total asset, either the book value or the market value, minus total equity, total capital employed, minus preference share capital that should be deducted is not there, minus half of the current year profit capital employed into normal rate of return. Then calculate the average profit number of years. If the profit is given, that itself is the average profit. Out of 80,000, 18,000 deducted, that is 62,000. 1,24,000 is the value of the goodwill. We move on to last problem. Problem number 5. Share capital, building, machinery, furniture, 5% government bonds is a non-business asset. Stock, debtor, cash, here. Share capital of rupees 10 each, 1 lakh, profit and loss account. Debenture is a liability, creditor is a liability, provision for taxes is a proposed dividend is a liability. The net profit of the company after charging division and taxation were as follows. Profit 17, 19, 18, 20. The land and building revalue 95,000, machinery 71, furniture 4,000. Fair rate of return expected 10%. Find out the value of the goodwill 5 years purchase. So non-business income is 10,000. Average profit first year 2006. 17,000 minus 500, 16,500, 2007, 19,000 minus 500, 18,500, 2008, 18,000 minus 500, 17,500, 2009, 20,000 minus 500, 19,500, 2000. 10, 19,000 minus 500, 18,500. Add 5 plus 5, 10, 15, 20, 25. It is 16,500 plus 18,500 plus 17,500 plus 19,500 plus 18,500, 90,500. 6 4 23 33 4 5 6 7 8. Average profit 90,500 divided by 5, 18,100. This is your average profit. Capital employed, average capital employed, particulars, rupees. Either the book value or market value. Come back here. What is the first one? Building revalued 95,000. Building 95,000. Building 95,000. Then come back. Machinery. Building 95,000. Machinery 71,000. Then furniture 4,000. Then stock 12,000. Then debtor 6,000. Cash 2,000. Add the figure 95,000 plus 71,000 plus 4,000 plus 12,000 plus 8,000, 1,90,000 minus, you call this as total assets as A, minus total liabilities. Total liabilities. First one is debenture. Debenture is 15,000. Then creditors 20,000. Provision for taxation 9,000. Proposed dividend. Continue. Proposed dividend. Proposed dividend 15,000. Add plus 9,000 plus 20,000 plus 15,000, 59,000. Total liabilities. You call this as B. Capital employed A minus B. What's your A? 1,90,000 minus 59,000 is equal to 1,31,000 minus half of current year profit. What's your current year profit? 18,500 into half. Current year profit. This is your 2010, 5.5. 18,500 into 1 divided by 2. 9,250. 9,250. 18,500 minus 9,250. 1,31,000. 1,31,000 minus 9,250. 1,21,750. Average capital employed. Normal rate of return. Percentage. Normal rate of return 10%. 1,21,750 into 10. This is 12,175. Super profit is equal to, what's your average profit? 18,100 minus 12,175. What's your average profit? 18,100. Normal rate of return 12,125. 18,100 minus 12,175. 5,925. Goodwill. How many times they ask? See that? Goodwill. 5 years. 5,925 into 5 times. Into 5. 29,625. This is the value of goodwill. First calculate average profit, deduct in, divide by 18,100. Calculate the average capital employed. Total capital employed is 1,21,750 minus half of the current year profit deducted. This is your capital employed. Average capital employed. Deduct 9,250, 1,21,750. 10% of this 12,175. Deduct my 5,995. 5 times is the goodwill of the firm. We solve the 3 problems. What's the procedure? First, calculate capital employed, total asset minus total maybe book value of the market value minus half of the current year profit. Deduct average capital employed into rate. Then calculate the average profit, total profit divided by the number of you'll get the average profit. So average profit minus normal rate of return is called super profit multiplied by 3 years purchase or 5 years. That is the goodwill of the firm. Hope you understand. I solved about the 3 problems, all the 3 problems in one and the same. Hope in the next session we'll move on to valuation of share. Till then, goodbye. Meet in the next session.